Live?
Yep, we're live.
Good morning, everyone. I'm not sure if we're live, but I'm going to pretend we are. And I'm Doc, and this is my SPX Daily Plan Roadmap and some other market stuff. And if you're interested, please click the link and subscribe to the YouTube channel, to the Substack, to whatever. We have a Discord. We have all kinds of stuff going. And all that stuff should be down there in the bio or in the description or wherever it is. Anyway, Nanda using her husband's login. I see. Anyway, so quick recap of where we are, and please on social media, like, retweet, share the YouTube, however that works. If you find value in it, and I guess you're here watching it, so you do, then I think other people might find value too. I firmly believe that. That's why I do this. Okay, so we got a lot of lines over here, and we'll get to that in a minute. I think what I'm going to do to keep it simple for now, I've been just kind of looking at this for my basic TA kind of thing. It's a multi-time frame pivot chart that I kind of like, having done multiple TA systems over the course of the last quarter century plus. I found looking left pivot where buyers showed up and sellers showed up works best for me. Anyway, that said, yesterday, just a quick recap of what happened yesterday. We opened around wherever it was, 68.40-ish, somewhere here. I guess here's where we opened. Quick drop as vol spiked. Market is jittery, we know that. Bounced off of that 68.15. We had 68.20 as our bounce level, kind of tagged it perfectly. Some subscribers jumped on that short, and that was kind of, they made their day. That was it. Once we reclaimed 68.50, round number, we kind of squeezed up, and we kind of, let me just change it to just yesterday so you can kind of see what happened. We kind of squeezed up. We tickled 6,900. We had a couple of trades at the end of the day that we talked about. Some flies in this zone down here, 68.80 zone. A lot of times we put flies on, we buy flies in the direction of travel, not trying to get the pin. And so when it looked like we were going to fail 68.90, based on charm, our read of charm at the end of the day, grabbed the 68.80, 68.70 center fly for about a 50% profit or 35% profit. Grabbed a 6,900.05 call for 35 cents, call debit spread, got out for 60 cents, whatever. Didn't really try to play the exact pin, just trade the movement. And we ended up at 68.90, which was a large strike, which we were kind of watching into the end of the day. That was clearly the inflection point. And we talked about why. Okay, so that's what happened overnight, as I'm guessing, Trump had his State of the Union. I don't know what the read-throughs are. I'm sure both sides have something to say about it. That's beyond the scope of what I'm trying to do here. But I am mentioning that because algos are going to be doing what they do. I know it might be shocking, but Trump might tweet something about people's reactions that might potentially be inflammatory. I don't know. And we have the Iran thing looming. I don't know if you were watching last night in the futures. When he mentioned Iran, the futures went down a little bit, but they quickly got bought up. So, and then we kind of, ground up overnight. And so Part of the old school thing is I walk simple moving averages. 50 days at 68.95ish, 96. The 20-day, we're finally above it. It's around 69.05, give or take, where it aligns with the magic marker. And I've been talking about this for quite a while now. The converging, let me show you. Let me show you. We're going to do a little TA-ish stuff. The converging the converging 50, this line, darker gray line, converging 50 and 20-day moving averages. And, we're likely going to get over the 20-day. And then that chart changes the whole pattern. We haven't been able to convincingly get over that and stay over that. But if you just kind of look at the pattern, the 50 and 20-day, it converges, it squeezes, we cut below, then we get the railroad tracks, and the distance between the two gets too great, old school TA 101, and then it starts to converge again. And so what typically happens is we get this, and we get this. And so, again, old school TA, we get this, and then we should get some kind of expansion up here, which would take us towards 7,000. Okay. And we'll talk about why that should be in a bit or not. I mean, obviously things can change. Iran conflict stuff, NVIDIA earnings. So obviously, again, keep saying obviously, but maybe it's not as obvious as it might seem. NVIDIA, after the close, that's going to pretty much start the course for the intermediate short term for sure. And so Tuesday gave us classic vol crush. Right. I forgot to mention that. I actually wanted to lead with that. I'll lead it with that in my notes. I finished at the 50-day yesterday. Okay. So anyway, we talked about that. MA squeeze matters. Okay. Also, CTAs, hedge funds, whatever, are going to buy those moving averages or sell them. Yesterday, at the end of the day, we had leverage ETF buying. That helped. Leverage ETFs have to balance their books. Where are leverage ETFs? TQQ, the 3XQs, the SPXL, et cetera, et cetera. Those are leverage ETFs. Now, yes, there's bear leverage ETFs and bull leverage ETFs. The bull number ETFs outweigh the bears. Plus, either way, they have to rebalance. They have to buy to balance their book or sell, regardless of the overlay they have on. Okay. So we got that. Let's talk about volatility real quick. Soxol is another one. Good point. Yep. Soxol is another one. And since Soxol is weighted in, the semis, obviously, that are doing a lot of the controlling of what's going on in NVIDIA. So yes, that's a very important one. Thank you for bringing that up. We won't talk about, I don't know that there's a popular IGV software ETF, luckily. But the IGV has to rebalance, but it's relatively small. I'm surprised. Okay, so let's go to the vol space real quick. Let's see which one. 6-panel layout. Okay. 6-panel layout. Okay. So is this right? Oh, is VIX at 20? That doesn't seem right. 21. Is it? Let's see. Session full trading. Yeah. Okay, that's better. So VIX is 19.86, and the VIX futures that this is priced off of. You can't trade VIX, you can trade VIX futures. You can trade VIX options, you can't trade VIX, just like you can't trade SPX. You can trade SPX options, you can trade SPY, you could trade E-mini, but you can't trade SPX. Same thing here. So just like SPX is now whatever it is, and the March futures are about 10 points higher now. The futures are supposed to be higher than this. And I guess they're lower. So that's wrong. I've been saying every day I'm calling BS on this. That doesn't mean that we won't get a little VIX spike and these won't come back into balance. But keep your eyes on the VIX futures, folks. At the end of the day, that's what's going to control how things go. The VIX 9-day, I've been watching that. We've been talking about that. And yesterday, when we had that VIX spike, the VIX 9-day, which is the short-term VIX, kind of went up as it's been doing, went up a little bit more than the VIX or equal to. So kind of backwardation, near-term fear, all that kind of stuff, which is slowly subsiding. Really, the last two events that, kind of could get a little vol spike, clearly NVIDIA's earnings, but once the unknown becomes known, even if the earnings are shitty and we sell off, that uncertainty will be taken out of the volatility chain. Now, might be replaced by certainty that, oh shit, we're going down, but still that reprice will come in relatively quickly. I'm not expecting that, but who knows? I know not to believe it just because I think it. The other thing, obviously, is Iran. That's kind of what the market's holding its breath on. I saw some bullish Fed comments or dovish, whatever you want to call it, by the usual suspects. The volatility also came out. People aren't really looking for VIX calls. So that's what's going on in the volatility space. I got more stuff I look at. I'm not going to bore you with the details. What I will show you, and you can go here, Control C, watch this technological prowess. Control V. Isn't that impressive? I was able to copy and paste it and put it in there. Let me get, hold on, let me get, okay, come on, dude. Okay, here's the VIX decomposition index. This breaks down what happened in VIX into chunks. If you read the PDF, there's actually more chunks. These are just the main factors. And sticky strike is the neighborhood we're in. Basically, price goes down, VIX should go up. Price goes up, VIX should go down, up. Repricing the surface based on the movement, the neighborhood we're in. Are we in the fancy neighborhood on the Upper East Side where the steak joints are expensive, or are we at Applebee's? So here the market went to Applebee's for their steaks. Parallel shift is how much the price of beef is, and the price of beef went down also. So people aren't reaching for protection. The price of beef went down, and then we moved into a cheaper neighborhood. Put skew, demand for out of the money puts trailed off a little bit. Call skew up a tiny little bit. I don't know if you can see that 0.2. And so that's breaking down what happened to volatility, which kind of all makes sense. At least it does to me. So anyway, that's the VIX decomposition index. I don't see Vol Trader. Louis, can you send him a link in case he doesn't have it? I mean, he jumped on yesterday, but you never know. And let me get back to the full roadmap and the breakdown of the decomposition index and all that is in the daily plan. Part of it, if you subscribe to the Substack, which the links are below, you'll get this stuff, and then the proprietary stuff is also there. Wise play here is respect to squeeze. Don't confuse pre-event drift with post-event conviction. Okay, earnings and events, macro calendar, nothing much going on. Fed speakers, bullshit. TJ Maxx lows, I didn't see what happened in lows, but there could be some read-throughs from that. After the close, NVIDIA. So levels and lines, we talked about it. I think this is handy for you to have. Put these lines on your chart. You know where they are, 68.95, 69.05. Been talking about the two MAs ad nauseum. The expected move rails, 68.75, 69.40. Wouldn't shock me if we got up toward there, and I'll show you why in a minute. And just kind of the main zones below 75 would be 50. The basic chop zone week is 75 to 25, and above 40. And of course, pre-squeeze lane, of course, you could squeeze. Okay, tiny gamma glamps, and then I go through more detailed stuff in the roadmap. And then during the day, we kind of talk about it. Let's see. Let me go back to here. And you might notice, or might not, I have spot gamma here, I have gamma edge here, I have unusual whales here, I have tradingvolatility.net. I'm pointing that out to just point out that I synthesize from everybody. I'm not a zealot, but this is my preferred platform options app for a number of reasons. But I am happy to look at all of them, and actually I'm going to have some of these people on here either doing this or special webinar presentation interviews, kind of talking about this stuff. So keep your eye open for details on Twitter, on Substack, or in Discord. Okay, so here's where we are. Let's talk about it the way we did this morning with the subscribers in the Discord. 6,900-ish, where we are now. Positive gamma. And if you don't really know how to read this, I have the accelerator course, which is coming out. I sent out some information about it. Short version of it, 10 beta testers, 10 slots open for subscribers. Only $4.99. Complete soups to nuts, from what is an option to how to trade it, to how to use the platform, to gamma and all the Greeks, to volatility, to how you combine traditional TA with gamma, CTAs, hedge funds, flows, all that kind of stuff. Q&A format, but there'll be written PDFs and stuff that you read beforehand, and we kind of talk about it. Okay, so we're over 6,900, and that information should be down there somewhere too. If not, we'll make sure it is. So right now we're above 6,900. Positive gamma. Market makers provide liquidity. Think support resistance-ish, kind of. So over 6,900, if we get too far from 6,900, market makers are too long. You don't have to worry about that. Long story short, if we get too far away, we get pulled back toward it. If we move to, we get pulled back toward it, but then as we get close, we bounce away from it. So this creates sort of a natural zone here as long as we're over 6,900, and the opposite here at 6,925. So your main action bound zone for now. And in between, there's not much, so kind of ping pong travel. We have the 20-day moving average reference point right here at 6,910, pretty convenient. If we can get over 6,925, which well within the expected move, then we enter a stickier zone with positive, negative, whatever. We enter the stickery zone, 6,930, which was the top of the expected move yesterday at the close. The expected move is going to change as time changes, whatever. This was the expected move, and I put this in multiple times a day in the Discord. This was the expected move at the close. Now it looks like people bought the expected move. And so expected move is just what the options market prices in as where there's a expected move, we call it a 68% probability, whatever it is, or a flip that 35% for 30% probability, or you want to use delta, 20% probability that we get there, depending on how you like to look at your probabilities. And so in this zone, anywhere in here, if we squeeze whatever, and then all the way up here at 69.55, you got 1,500 calls. So there's some speculation all the way up here at 69.15. These are buys. These are buys. These are sold. And I want to just a little quick teaching moment. So while this is a big bar now, pretty much the biggest call strike on the board, if we change from position number, I like to look at position number. I like to know where the landmines are, even though I'm not near them. We switch it to gamma, the effect it's going to have on hedging now and response, that's small. This will get larger if we're approaching it, assuming everything else was gamma is stronger, market making hedging response is stronger, the closer the SPX is to that level, and the closer we are in time. And conversely, as we move away from it or time passes, this has less influence. So right now, the biggest strike on the board, the most influence, is the 69.30 fighting with the 69.25 and the 6,900. Pretty clear zone. And below here, and I'm not going to go through every nuance of the chart. I just wanted to just give you a flavor for how you look at the position size versus the gamma. The gamma is going to be a moving target. So are the positions, because people are going to buy and sell, and we get the intraday updates in the Discord. Quick example, I got a shout out to the Owl who does our intraday flow stuff. I don't know if you can see it, but intraday flow, what's going on? 0 day, 69.25 call, buy to open. Intraday updates all day long. What's going on, how that changes the profile. Yesterday at 3, and it's actually part of what made me go long that scalp. At 3:11, 6,900 calls, 1,600, 1,000, 1.6, so 1,600 calls bought at 3:11. I bought them too. Sold them. I wasn't waiting to get there because then they're going to sell them too. They were like cheap. They were cheap. So you watch the flow. You got to watch the flow to be in the know. One of my little taglines. And so we have that too. For that's in the premium Discord. Anyway, so that's one of the features we have, and that's it. I'm gonna take a breath and. Julie, are you ready for the presentation? Then we'll get Vol Trader on. People have been really interested in hearing what he has to say. So, are you ready?
Vol, do you want to go first, or you okay if I do?
Yeah.
You ready to go?
Yeah. You want me to start or?
Yeah, go ahead, bro.
Okay.
You're up.
So let me. Okay, no problem. 1 second, please.
Okay, so I'll just babble in the meantime.
Here it is. Okay, I'm ready.
Okay, where's your? There it is. Okay. Okay, remove my thing. Remove Ed. There we go.
Oh, well, that's the market making thing I did for you, but that's not the thing. Okay. Do you see my document? Yeah.
Yes. If you can blow it a little, maybe.
Yeah, sure.
Okay, there you go. That's much better for the.
Okay. So first of all, I do my pre-market stuff early on, like around 5 a.m. New York. So things might change or might already hit some targets. But first thing I noticed is that as we were pushing new highs on the Globex at around I think 6 a.m. So like 2 hours ago, there were some bids coming in, buying some volatility there to the upside, indicating some stress on the short calls doesn't matter if it's a big hedge fund or the market maker, but that might be indicative. So like obviously I'm looking at the February DTEs, so 0 DT plus 1 plus 2, but who knows? The larger the position there, it might spill over into the large calculation of the VIX. Although I think it's more a local one into February 27 rather than something else. But still, I saw some pressure there, and I'm still seeing it on those DTEs. So I
Let me
won't be
interrupt real
surprised.
quick, just a teaching moment. Val said it may or may not spill over into the calculation of the VIX. The calculation of the VIX is go out the strip of SPX options 30 days from now, then look at the Friday before 30 days or Friday after. So we're talking about March expiration. That's what goes to the calculation of the VIX. This might go into the calculation of the VIX 9-day. And so it's important when you're looking at it, at the VIX 9-day, to have an idea of what you're looking at. I'm sorry, I just wanted a teaching moment.
So the way I see it is that because these because this there's this bid and pressure on the vol here on the on the expiration between now and Friday, February 27. This might also has to do with the VIX expiration that happens at the open today. So it's hard to tell. It's like if we didn't have that VIX expiration, I would just say this is topping pre-market, hitting SPX 69.15, 69.20 into the open. I would just short it. But because of that VIX expiration thing, so it's hard to isolate what is affecting what. Anyways, the overnight shift in the open interest on the SPX, whether on 0 DT, on the remaining DTs of February, all bullish, and even more so, February 26, February 27, added more, let's call it bullishness compared to the 0 DT. So there's some confluence between today's expiration, tomorrow, and Friday. They all added positive delta to the upside from yesterday's close. So that is worth noting. Now, pre-market, we should hit 69.30-ish, maybe 20, something like that. I think we spike into the 69.30 from under, and then we cool, and then we get like a small sell-off around the open. But all in all, the market is very strong. 68.90, 68.80, that would be the line in the sand for today. So as long as we hold that, the market will just drift higher. I'm not sure about the path other than what I said into the open. Looking at QQQ for confluence, actually not so strong. Not that amount of bullishness coming in overnight on the open interest and the other data points, but not bearish. So might be a drag on the market, might not. I guess it's more like cautiousness on the NASDAQ because of NVIDIA. What I see for the Qs, 608, line in the sand, meaning long above, short below. First target, pretty much in the cards, 612. I guess that would happen together with the SPX tackling that 69.30. And for folks that don't know how to convert the numbers, you have it on screen, QQQ to NQ, you multiply by 416, NQ to NDX, you deduct 51.5. These are fair values for today. If we look at the actual layout, we can see that the blue line, which represents the transition between bearishness and bullishness, is around 80. The purple bars are put open interest, the green are calls, and we can see we still have in the money calls up to in the money puts up to 6,900, where we are above right now. But all in all, it's getting more and more call dominated, regardless of the gamma effects and stuff like that. It's more from a sentiment perspective. Looking at it from a different angle, we see the same 6920 pops up here all over on my end. You can see here where it says PM, shows 6917 pre-market. So again, 6920, 6930, max move at the open pretty much, or even pre-market. Looking at it from a different angle, from a mean reversion model, the red squares show zones of mean reverting. It happens to be today that the first zones above and below are red. So we're going to get selling pressure into the 69, 20, 25, same numbers that I saw before, pushing the market back towards 6,900 or 69.90, 68.90. And if we were to break 68.80, 68.75, we would get a flush down until this green area, starting around 68.30 or so, and then we get a bounce back up. I doubt we go down there. I doubt we go down there. I think the market will strive to get to the most uncomfortable level pre-NVIDIA, meaning stretching as much as it can to the upside and to the end of the day and just staying there, making you contemplate, am I going to buy the market at 69.50 and get fucked on NVIDIA or not? There's that. So the market tends to bring you like to very uncomfortable levels just before main events like today. Finally, I want to look at this. These are the candy wrap models and the skew. Again, we're consistently seeing a compression to the upside, which really makes it hard for the market to just rally. Even if it would rally, when this model is so compressed to the upside, even if we push through the 69, 40, 50 today, I would guess that we would get a strong dump tomorrow if this were to happen. So I'm curious to see how this will fit with NVIDIA, which is kind of, an outlier, but we'll see. Finally, with the skew, nothing special, pretty much the obvious that you would expect, resting around 69.20, 69.30 by end of day, seems like the natural place. Could be a bit higher because of NVIDIA, but should be around there. And that's pretty much it.
Thanks. That was great. Thank you.
Thank you.
And Vol Trader has been getting some great comments from the people in the Discord, whatever, and from people here on YouTube and Twitter. So we appreciate it, and we're going to have more stuff from him. We just kind of trying to mesh our schedules. We're like in different continents,
Sure, good stuff. Thank you.
I want to show you real quick when Vol said call dominated, it just reminded me. Gamma Edge always likes to talk about that, and I love these guys. I've learned a lot from Paul. I consider him one of my mentors. So anyway, I haven't been showing his stuff enough. I look at it. So I guess when I say call dominated, has a nice, quick, easy read, wide bottom top, 68, 69.52. So same numbers. I just wanted to show you the call dominated and the 68.90, the same level that Val mentioned is kind of the negative gamma number right here. This is looking at the whole complex. We switch views. It's kind of neat the way they do it. You can kind of see, just kind of trust your eyes for where we're going to stall and where we're going to go. Now, remember right now we're somewhere in here in that sticky, compressed candy wrap zone. Here's where his model has transitioned. I forget how to use this thing already.
So you can deselect on the right and then just choose the actual expiration you want. Right. Yeah. Right, and if you want the complex, you just click, you use the control.
Click right, select all, whatever, right.
No, you can specifically say, let's say remaining of February, just the first three, whatever complex you want.
Right, like that. So here's February. And here's gamma, here's net delta, etc. So I just wanted to bring it up to call dominated because a week ago it said put dominated, and that's when we would go. That's when it was down goes Fraser. Since I have this toy up, and since NVIDIA is what everybody's talking about, let's look at what they have about NVIDIA. And they've added a lot of new features since I was involved when they kind of got started, did some beta stuff with them. COTMP, so that's kind of pretty close right here, 191. So there's a lot of close bets. 192, 204. Here's the bottom for the whole complex. Let's look at what the market is pricing in for earnings. 175 to 212 are the wide levels, maybe if you want to sell the wings. But look at this. 200 strike calls, 500,000 for Friday, weeklies. This isn't even monthly or whatever. So we have large speculation there, 195. We have calls. We have basically 1 million calls right here. Expensive calls. So even if we go up, if this call costs, I guess make up a number. If the 195 call costs $4, if we go up or $4, we have to go up to 200 for them to be even breaking even. So a lot of times you see this stuff, but it doesn't realize, and so there's not a lot of hedging that's required from it. The flip side, if we exceed the expected move, then market makers have to chase up, which we often see what's seemingly irrational after earnings reactions. And it's often because we exceed the expected move and then they squeeze, or vice versa. We get a good earnings reaction, we go up, but if anything, we go down because of the hedging required of the individual options, et cetera, et cetera. Okay, it's 9:07. I was gonna wrap up early, so I'm gonna let Huey, who's got his stuff ready, take over the mic.
All righty, everybody. Good morning. So quick rundown. What I see here is a tight range, very noisy range from here to here. Obviously, I'm looking at 69.30 down to 68.80 as the range. But if you notice, as soon as we, didn't mean to do that. As soon as we leave the range, we have a good amount upside room, good amount downside room. So kind of going to expect to trade the edges here, kind of revert into the mean. But if we do have a breakout, you need to lock that. If we do have a breakout, I do think it's worth capitalizing on some upside or downside move. Unlikely, but that's kind of my approach today. I do see some interest in VIX, but I also see it coming down as well. So waiting to see what happens. I think if we tag 20, we might, or at least 19.5, we'll kind of work our way back down to 18. That's my anticipation for today, which means we should probably be trading some range. That's it for me today, guys.
You there? Oh, I thought your mic went mute. Doc, what happens with the expiration of the VIX soon? Does that release some resistance from that aspect, or vice versa? Doc, you're muted.
Yes, I am. I was talking to the guy that's my buddy that's helping me work on the property, and we've got to make some decisions about buying the container versus leasing one. We have a lease, whatever. Anyway, so I was handling those logistics during the brief moment. So anyway, I'm back. Okay,
What
so
happens,
thanks, everyone.
yeah, what happens with the VIX going away right now?
Let's take a look, but I'm good. My probably not much, and I'll tell you why. I'll show you why in a second. All right, let's switch gears from SPX to VIX.
Yeah, I mean the bid is still there. I mean we still are above
Oh.
17, holding the 20.
Yeah, okay, so let me do VIX expiration and then so for today, what's expiring today with the SOQ at 9 o'clock is basically nothing. 8,000 contracts here. You know, this bid here at 20, this will go away. That'll relieve some pressure on the VIX short term. But the real front month, the March contract, because what we have to look at, we're over here at 19. So we still have the same pathway here. So if we get over 19, it's the same pathway. Up toward 20, 21 stall. 18.5 seems to be a floor. So now these out of the money ones begin to decay a little bit. And so still the same inflections, 20 and 19. These days we'll consider 18.5 or 18 a bargain. We could get below there and kind of end up somewhere down in here. It wouldn't shock me once Iran and NVIDIA clear up that we get down into this zone. But as long as there's the uncertainty, we're still going to be more or less where we are now, 18 and a half, 19 to 20. And if we get really nervous, then back to 22.
So that VIX 17 is the floor due to the Iran thing?
Looks like it, yeah. Yep. For now. And of course, you know that can change in a heartbeat.
Okay, thanks.
You're welcome. All right, everybody. Yeah, it's at 69.30 now. Okay. Yeah, and then that's where, and when we started the pre-market, when I was talking on the Discord, when I was talking here, 69.30, here we are. Now we're in this whole sticky thing. Suddenly the 6,900, which was, oh, can we ever get there? A week ago. Now it's support, quote unquote. So they stabbed it with their stealing knives, but they just can't kill the beast. Okay, everybody. Have a great day.
Bye,
You
everybody.
too. Thank you. Bye-bye.